Gold and gold miners turn red after Fed raises inflation expectations. Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics for a quick video recapping the Fed announcement today, which, like most Fed announcements, in reality said absolutely nothing. Although, since I know a lot of you are seeing headlines like gold and gold miners turn red after Fed raises inflation expectations, or gold and silver sell off after pseudo-hawkish Fed statement, Powell goes full bull on the U.S. economy, I would just remind you that everything the Fed said today, they've been saying for a long time as well. In fact, you can see, even well before Bernanke came along in 2008, but their rates were lowered to 0% to a quarter for their target Fed funds rate. Stayed there for a long time. By 2018, it got as high as 2.5% before the economy started melting down and they lowered rates and they piled QE on top of that. And keep in mind, even as Jerome Powell says they are moving up the timeline, they're talking about 2 years out. Translation, they're going to change a lot. They can't even tell you what's going to happen next week, let alone 2 years. So I would take this one with a grain of salt. And if you're sitting there saying, all right, well, then why did silver fall off a cliff like it did today? How does that make sense? Well, same thing with gold. Why did it just drop like that? It's not for any of the silly reasons you will read on CNBC or elsewhere. In fact, it's for one reason and one reason only, which you can see on this price and volume chart, where heavy amounts of volume were dumped on the market, and you can see the cascading effect, much like Bart Chilton described in his comments, and much like current acting Commissioner Rostin Benham described in his comments about how there is a market structure which is voted on by JP Morgan, no less, that as resilient enough to tamp down the price at certain levels. And that's exactly what you saw there. So, is it against the nature of the laws? Absolutely. Do you need to be upset about it? I would say no. In fact, I don't know if Basel III will be when things really change, but I found it's interesting, at least thinking it's possible that this thing could finally be repriced soon. I have a feeling that after that happens, at least myself, I'm going to be saying, gee, I wish I had more time to buy while the prices are low. So I suppose whatever you think of the price of any asset, take a step back, see what makes sense to you, and find the good in that situation. And lastly, before wrapping up here, and we will have a full episode of the show coming up in about an hour, talking about the finding silver in Mexico, which I think you will really enjoy. Some snippets of what might be there at Silverfest too. But before we did wrap up, I just wanted to mention some news from Bluestone Resources, who did bring us this episode tonight. Thank you, Bluestone, for sponsoring what we're doing here. And they did have some drill results back from Cerro Blanco that include 140.2 meters grading 1.1 grams per ton gold and 8.2 grams per ton silver. And as you can see here from Jack Lundeen, who has been on the show a couple times, and nice to see them continue to follow through with what they've been doing. And you see this study was initiated and successfully completed on schedule and will contribute to a new resource estimation currently underway. The Salinas accounts for about 1/5 of the current resource, and these encouraging results will lead to the definition of additional ounces and improved detail in the mine plan. So congratulations to Bluestone and Jack. And again, I appreciate you bringing us this episode. Separating fact from Federal Reserve fiction. And to find out a little bit more about Bluestone, well, here's the last time Jack was on the show to tell you about it himself.